Welcome to Stephen Johnson's Stocks, what I think will be probably the best lesson of 2020 coming from me, or maybe at least the one of the best lessons. And it comes from the 1.9K loss that I took on MIST. I posted it on Twitter, and a lot of people were asking me, well, that's great, but you make videos about your profit, so you should make videos about your loss. So this is the video about the loss, and honestly, I've spent about 5 hours, and there's a few things you'll take out from me going through this. The first is, what was I doing in March and April to make 10 and 15,000 compared to only up 3,500 after this loss? How has the market changed overall to adapt to a short sellers gap and crap strategy? And 3, what are the kind of rules that I'm going to be putting in place to ensure that I have 6 set rules that work in all different market conditions? So we'll start by just checking out MIST and some just basic rules on MIST. So with MIST, there's a few warning signs immediately. Just got stocks to trade up. The volume is 200 million. 200 million definitely suggests that the stock is likely to squeeze. And B, the pre-market volume is like 8, 9, 10, 11, 12, 13, 14. The pre-market volume is 16 million. So just remember 16 million, because back in March and April, that was the daily volume that used to trade on a day, not just pre-market. And the other important thing to remember here is that MIST, if it trades 16 million pre-market, it's going to trade at least 10 to 12 times that on the day, which leads to around 180, 200 million. So there's a couple of rules that are already cemented that I'll get to in a moment. But first, I'll just show you the mistrade, the mistake, and I'll kind of talk you through it. So, and just FYI, MIST is a 4 million float. I mean, it's a 20 million float, but it's like 70% institutional owned. And that really leads it to be more of like a 4 mil float, to be honest. The trade, I was lucky enough to have some of it record. Unfortunately, a bit of it crashed. But this is in the early hours of pre-market. You can see like, it's nothing crazy right now. It's like 100,000, 200,000 volume, which is okay. It's like, it's busy, but I mean, the fundamentals of this stock are the fact that it's up so much is that it's done a shelf offering and it can do some dilution to survive. And it's actually losing quite a lot of money as a biotech with no real future prospects of doing anything amazing as of yet, according to Yahoo Finance and the research that I could pick up on. So everything about this company is bad. They've got a shelf for around 100 million. And I think that it's manipulated and propped just to get the price high enough to make as much money as possible when they do release that shelf for the offering, which could come any day now, probably today or tomorrow. But in terms of our trade gap and crap, so the fundamentals matter and it should go down, but I can't guarantee whether or not it's manipulated or not, or whether because it's 70% institutional owned, whether they're going to hold them shares and lock it up. Like, I can't predict. So all I can do is go off price action and volume, essentially. Price action and volume as of now, it's kind of 835. It's reclaimed VWAP, it's holding VWAP. These type of stocks can push up and double top and go higher, or they can fail VWAP. At this point, it could go either way. So I've added a little short. You can see the short at 825 and 835. Keep in mind, I know I've just done a podcast with Tim Bourne saying it's not worth shorting pre-market. I'm actually 1/10 or 1/11 of my size. It's very, very, very tiny just to monitor the position. We get the breakdown on MIST, or it's just holding VWAP, just making that high or low. It's just managed to not drop yet. And when we get this this breakthrough, you can see that I just cut it. I lost 20 bucks, which is just good disciplined trading. Like, this stock is such junk fundamentally and news-wise and chart-wise that it's got a high chance it's something like VIVE, and it's just going to break down. So I don't mind that short whatsoever. I lost 20 bucks. I'd do it 10 times over. When we get the high of the day break, that 400,000 volume is becoming a little bit scary. We get the next few higher day breaks, nothing new here. It's getting to 9 o'clock. I'm thinking, do you know what it is? Everything fundamental wise suggests that this should go lower. And I'm quite positive this should fail at the open, because there's like 5 bearish indicators and a couple of bullish. The bearish is they don't have dilution, but they've got 100 million shelf, which is bullish or bearish, depending on how you look at it, to be honest. The chart is absolutely terrible. The news isn't worthy of it being up this much, which is two huge bearish indicators. But to be honest, bullish is pre-market, volume, relatively hot market. So, I mean, look, it's a mixed bag, but ultimately I think it's going down. Because we see these stocks, the likes of Pixie and stuff like that, they can generally ramp up, have a morning push, and then they always fail. Well, to be fair, Pixie doesn't always as well. But we've got this 910. I thought, look, I'll just take 100 shares into this candle, because I think around 915 a lot of these stocks can fail. I'm starting to think I'm right at around 910, but then we get this. I'm looking to think that this is going to start falling apart around at 915. I've got 200 shares now. I'm quite comfortable. Like, I've got 200 of 11 that I plan to short. We get the new higher day, and at this point, I'm just thinking I'll just wait for it to come. Like, I'll just let it go. So, and again, I don't think any of this trading is terrible. Like, I'm down $80. It's fine. So the problem is when we get to the market open. So it has grinded all up. And the big mistake that I made here is I didn't realize that the stock had traded, what, like 15 million pre-market, 18 million pre-market, whatever I said earlier. And that should have been a red flag, because the 18 million, 15 million pre-market times 10, 12 shows that it's likely to trade about 200 million. And if it's likely to trade 200 million, this isn't the type of stock that's going to fail at the open based on the pre-market volume and the end of day forecasted volume. It's not really likely to fall at the open. So the final barometer check that I need to make is wait for the first, again, the pre-market trades, they're not good, but they're not terrible. I'm down $80. The final thing that I need to do here, and I don't mind getting squeezed from 8 to 10 on 200 shares. It doesn't matter. Like, it's tiny size. What I need to do is let the first minute candle play out and see if it trades more than 1 to 2 million volume. If it trades more than 1 to 2 million volume, that's kind of the second indicator. The pre-market volume's high, the opening candle minute volume's high. This is quite likely to be volatile and squeezed. Just let the first 5 minutes play out. And to be honest, I only lost $800 on the initial trade. Or no, I lost 1.2K on the initial trade, but I actually decided to fight it in another broker that really made it a 1.9K loss, which is another mistake. But the thing with losses is I don't want to, I'm not bothered too much about, because when you're in a high emotional state and you're really disappointed, I'll just pause this here. When you're in a high emotional state and you're disappointed, you do fucked up shit and you do flip-flop. But I'm more constant, because when people say, how's your discipline got better? And it has got significantly better. My discipline, I was known as the trader with the worst discipline. And now I'm consistently profitable this entire year with one red month. My discipline changed because I put myself in those bad situations less. I had rules that made sure that I'd never have to make that hard decision in a high emotional state of, oh, fuck, I've just lost 800. Shall I get back in? I had preventative measures to make sure I never had to make those decisions. And this is when I put myself in one of those situations. So if we just look, we're about to open up any second. Again, I mean, we traded a couple of million at 925. We traded a couple of million in just the last 5 minutes pre-market. It's crazy volume. And unfortunately, the computer crashed, which is why I don't have the full recording, sadly. When are we getting? Okay. Tiny bit back. So here's the opening candle. You see that we immediately, within 3 or 4 seconds, hit 700,000, 800,000. We've just passed a million in the first 5 to 10 seconds of the market opening. So we've passed a million in 10 seconds, which means we're probably going to hit about 3 or 4 million by the time the minute's up. That means that with this 18 million pre-market volume, I shouldn't be taking this trade. I shorted, it didn't go through because I'm having problems with my broker. So I hit it twice, and unfortunately, my hotkey got filled twice. So I'm in too much size too early. And then at this point, because I've just hit my hotkey twice and it both went through, I'm just like, fuck it, I need to hope now, sadly. We're at 2.6 million. I've just shorted again. And by this time, I'm pretty much full size. I've took 3 trades, each with 350 shares. So I've took about 1,000 shares at the open, which puts us in short 10 grand. and it's just a really, really stupid thing to do. I mean, it traded 3.5 million in the opening candle, and I'm thinking I'm stuck now. It needs to go down. And to be honest, everything but the volume says it should go down. Many of the Chinese stocks play out the same way as this, and many of them have the same pattern. The difference is I haven't seen anything trade more than 3 million at the open and not squeeze or run, even 2 million that I can think of. So yeah, I'm just hoping. It's starting to stutter, and the best thing I could do here is just cover into the wash. The problem is I'm running this on camera, which is good, but it's causing the computer to get laggy. So I mean, I put it on a higher record frequency or whatever, like I was recording better clarity, and it just slowed my computer down too much and caused it to crash. So, I mean, on a clearer day with a better mind, I might have got out of this relatively unscathed, but there's so many traps, I don't know. Yeah, when we get this drop, I'm pretty much flat. I'm in profit. And the first thing I should have ever done here is take it off again, but I was having computer problems. Things were being slow. I couldn't get the orders through. But I mean, in hindsight, I'm not going to run high-powered camera in screen recorders anymore. And I did get that. I was down like $200 on the day after I got that cover. And I was like, $200 loss. To be fair, you got away with murder because it just traded 3.5 million at the open. That short is disgusting. That short is honestly probably the pre-market shorts aren't that bad because it's 1/10 volume. That short there at 808 is me just getting away with murder on a 3.5 million opening candle with 15 million pre-market traded. It's forecast for a 200 million day. And I'm covering and then shorting below me cover. It's just pure greed thinking, look, you got away with murder. Now let's ride your luck. And that riding of the luck is what caused that's ultimately what caused the 1.9K loss. Because what happens, we get the push back. I mean, it's not full size yet. We get a drop to VWAP and I'm thinking, oh, I'm in. And then the computer crashes. So that's the last of the video that I've got. But I do have the trade. Just give me a sec. So we can see we have the initial shorts here. We can see, if I just zoom in a little bit, we can see these shorts, and then I'm just hoping that this breaks down, but on a 3 million 1 minute candle, we're expecting a squeeze. And to be credit, I cut it there for $800 as in another broker, and I ended up cutting that a little bit higher up as well for a 1.2K loss. So I lost $800 in my big account and $800 in a smaller account as well. From what I remember, I just thought, all right, I'm not done with this. Let's start reattacking. But you've got double bottom, higher, low squeeze. And then eventually it did break down before then squeezing in the evening. So ultimately, I mean, these super high volume stocks, I don't mind the shorts. I mean, look, if because of the opening volume level, if because of the opening volume, you want to just think I'll play it when it squeezes, then play it when it squeezes. Like, you might take a tiny starter in this, or you might just leave the first 5 minutes. But I don't want to be full size. I want to be like seeing where this tops out and where it makes a lower high. So when you've got the top here, just leave it completely alone. When you get the double top and failing, it looks like it's backside. I don't mind taking a few hundred shares here, taking them off, taking a few hundred, taking them off. And then when it squeezes up, taking a few hundred, and then you catch the downtrend. Ultimately, it squeezes back up later, but there's some warning signs of the higher lows here to indicate that this trend is broke. And I can just draw that out. So again, to play this again, I think this is a no-go. I think this little area here, a few hundred shares, cover when it doesn't break VWAP, a few hundred shares. you might be adding here a few hundred shares, but I don't want really being more than half size. Then if it breaks higher D, you're just out with a small loss. And then you're riding this down, to be honest, until you've got this trend break. Then you've got these higher lows. In this squeeze, you want to be out by. I mean, in hindsight, and it's all easy to look at and analyze, but I mean, in reality, it's quite simple. Low float 4 million, 15 million traded pre, 3 million opening candle. So if I just break it down one more time for you guys. It's a 15 million pre-market. So the first thing you look at is what's the pre-market volume. If it's more than 10 million or around 10 million, just a bit over, you're thinking, if it's between 5 and 10 million, I'll take a third size into the morning spike. If it's above 10 million, I'm thinking, let's see what the morning spike is. If the morning spike in the first minute's only a million or less in this day and age, I think I'll take a third size. If it's more than a million to 2 million, I'm just going to wait for the first 5 to 10 minutes to go. My strategy for that gap and crap is then look for the squeezes because they will be there, undoubtedly. And you're going to catch a good safe entry. And if you short the first squeeze and then it has another leg up, just cut it, you're fucking done for the day. Now, the next thing that I want to show you is the comparison in the market and what I was doing well from March and April to what isn't really going as well now. And to do that, I will just show you a video from just a few months ago and what I'm talking about and what I'm saying, which is enabling me to have kind of record month profits. Under the Excel, in April, it was a 10K month with no So the most important thing that I flagged there is the market conditions will be different, which I'll show you now, because we're going to go through some trades of May 2020, then we're going to go through some trades of July 2020. And for sure, there was less volume in the market, so it was much more of a short biased market. Because less volume, less bias, less squeezes, less unexpected moves, less higher pushes at the open. But still, the principle of taking a third size, taking the starter, cutting it if you're wrong, it enabled me to have an entire green month with no red days whatsoever. And somewhere along the line, I just forgot that rule. So it's again just reiteration: take the starter, cut if it's wrong, build it into a winner. I never, ever, ever, ever should be more than the third in size without being near the top. But let's just go back and let's look at a couple of the trades. So all I want to do now is analyze really the volume of some of these trades. You see PRTY traded 50 million, which is not huge. I mean, we've just saw missed, which was 200 million. Terrible intraday. I'm just going through, and then if you look at the daily, we have like a 2 million minute candle as well, which is pretty high. But with PRTY, because of such light pre-market action, I think it's okay to take a third somewhere in here. Take your third, whether it's here or whether you've got the lower high. And then normally I'd say, and the pre-market action is so light here, it's pretty light, so there's no immediate sign of danger. And then the opening candle is about 2 million, but it means that basically if you're up and you start going red, you need to think about cutting because you've got that 2 million candle. But in this instance, it's a more bearish market, so that 2 million is a straight downside 2 million. It's not like 2 million to the upside. It's 2 million shares worth of everyone getting the fuck out. So PRT wise, a bit of a difficult one because I mean the pre-market volume is very light compared to MIST, which means if the pre-market volume is lighter, means be open to take that starter. But to be honest, it's so down pre-market that you wouldn't really take the starter in the first place. With the likes of Pixie, you see like the big squeezers and the big plays and the big gap and craps. You've got like Pixie 32 million. So 32 million is like not really your SFED. If you look at the gap and craps and the SFED, you've got what's that, like 18 million. So the gap and craps of May were like 50 million, 30 million, 20 million. Pixie 32. If we look at the intraday on SFET, again, you've got these fading pre-market charts that you can fade, take starters quite well. And if you get a good enough entry, the morning volume, the morning push almost doesn't matter too much. I don't want to say it doesn't matter, but you're up so much on your entry, even on a third size, that you can add into a push. And even if it is 1 or 2 million, you just add into a winner. The problem where you have to watch volume is when you unrealized red, then you need to think like, how much do I want to add to a loser? Because if you think, the rule is never have more than third size until you've confirmed the top and you're adding into a winner. But when you're already into a winner, then the third size doesn't really apply as much. It's more about just cutting your loss if you go red. And I hope that makes sense. So SFET was another easy one. But again, SFET, look at that, 400,000 volume in the opening candle. Now we're hitting a couple of million. Even Pixie, the crazy runner that ran from the 910, the opening volume was 600,000. We're hitting 3 million opening volumes now. And then, so that's just an indicator of how things are changing. And then I'll show you some trades, some of the gap and craps of more recently. So just to recap, the main key lessons of July are third size applies all the time before catching the top. Obviously, the third size doesn't apply if you're up unrealized quite significantly. Pre-market trading, always allow the third size rule if the volume, so pre-market trading allowed. So you are allowed to trade pre-market with the third size rule for never being more than a third of your position. So if you have 600 shares to trade, don't be in more than 200. But you can only do it if the volume is less than 10 million pre-market. If the volume's more than 10 million pre-market, you need to be watching the morning candle to see if that's more than a couple of million. If it's less than 10 million, if the opening candle is like 1 million, 1.2 million, then I'd say, yeah, start trying to find the top with third size. If it's more than 2 million, you just have to wait till 940, 945 and then maybe miss it. Always remember, pre-market volume is indicative of like 10 to 12 times on the daily volume. So if it's trading like 8 million pre-market, that could be like, or 10 million pre-market, that could be a good like, or 8 million, 7 million pre-market. Yeah, it's about 75 million on the day. Never short the first 5 minutes if the volume's more than 1.5. Never short if a stock pops before 10 minutes pre-market. That's an old rule and I've stuck to it very well. I just need to stick to a couple of the other rules. But if we just look at some of the gap and craps, so this is a gap and crap with bag holders, made 270 bucks on it. Again, like I had this pre-market entry because the pre-market volume was very light. And then it was down too much, so I just waited for it to come up. That was a nice gap and crap. This is another gap and crap. The volume was like 70 million, so you've got to be quite careful. And again, the volume's 70 million. It's down too much pre-market, this one, so I'm not chasing weakness, but I caught the trend break, which was quite nice. That was a very nice trade. Vive, the volume was very light. We're talking about 17 million. With 17 million volume and we only had like 500,000 at the open. It's a terrible chart. These are perfect examples of building size pre-market, catch the top of the third size, and then add into your winner. But I mean, it's down so much. I took the pre-market and covered at the open. What else we got? We've got some gap and craps. NNVC, the volume on this is about 35 million. So it's light pre-market volume. The opening candle is only 500,000. So you can see how this lighter volume, again, are still a little bit early on this, but not really. I mean, this is pretty much a perfect trade. So it's trading, it's pre-market volume's light, say the pre-market volume's maybe 5 million, times that by 8 to 10 to 12 or 7 million or 4 million. So it's trades about 35, 40 million on the day. It's very low potential of squeezing, very low potential of running pre-market so far. Sometimes they can change. That means I can get in pre-market. Took a bit more than a third size here, but I'm breaking rules, but I'm not dead against it with all the overhead resistance. If I wanted, and I'm adding into a winner, like it's third size to find the top once I'm adding into a winner. I don't mind as much if it's really weak, really light volume. AIHS is when it changes. We had 124 million daily volume. The pre-market volume was very strong as well. The pre-market volume in this instance was an indicator to not be short pre-market, especially not at all. This traded more than 10 million pre-market, so don't trade it pre. Look at the opening candle. What did it trade? It traded 6 million in the open candle. That means leave it for 5 minutes. Ended up going really red on this before I then went green. If I'd shorted that lower high or if I'd shorted the VR fail, I would have easily made more than $1,400. The only reason I made $1,400 is because I was stubborn and I got lucky. What other gap and craps we got? Wimmy is a perfect example where I nearly lost a shitload of money again. The volume's massive pre-market, 10 million plus. It's a sign to get out. It ended up trading 150 million on the day. And was the volume light? I'm not sure if this was this. No, Wimmy. Sorry, I don't know. I know I nearly lost a lot of money on it. Pre-market, I mean, at the open, the volume was about 700,000, but the volume looked pretty heavy pre-market. I'd need to go back and check. But, I mean, if the volume's pretty heavy pre-market, you're leaving this at least till the open. And if you do leave it to the open, I mean, you're pretty much okay. Obviously, when the higher lows come in during the day, you're good to be out. Eco, quite heavily traded pre-market, opening candle 2 million. This tells me be careful. Maybe watch it till about 9:45, 10, or ignore the first 5 minutes. If I'd have shorted the double top, I would have the perfect entry at 3, and I'd be covering down at 2. As a little bit early on this, again, I don't know the exact pre-market to run through this pattern. Again, 50 million, quite light pre-market. The opening bell is 1 million. I don't mind shorting that push. And then this one just went wrong. I lost $60. It's one of them things. You're not right all the time. OSS gap and crap, extremely light volume. Could have took some of that pre-market. I didn't. Instead, the opening candle's light. A bit too light on this occasion, but again, the short into the any kind of push, I'm cool with. Nice profit. This gap and crap just didn't work. Just one of those things. I think I did the right thing, shortening it to 1 million resistance, covering a bit. Maybe adding that short on the VWAP was where it was a mistake, because I was actually in profit before that on that trade. NBRV 2 million. This is the exact example. Like low volume pre-market, so a tiny short's okay, but the opening candle was a couple of million. And if I see that, I need to be waiting until at least 9:40-ish. And if I had waited till 9:40, I wouldn't have got squeezed up from 1 till 1:15. I would have caught the backside and I would have took like 20-25%. But it's all repeatedly over and over and over. Like, don't take the first couple of minutes of the candle when the volume is showing you that it's over 1.5 million, because there's a good chance of squeezing in. Probably 70 to 80% it does. I mean, to be honest, I'm going to track data from today till the end of next month, and I'm going to track how many squeeze, which trade more than 1.5 million volume, and I'll get back to you with the results. Voxel, I fucking love this first red day short. I just absolutely nailed it. Again, VRNA traded 100 million on the day. Deceptively low first minute candle, deceptively low pre-market trading. I don't mind. From what I can see, it's 100,000-ish pre-market, so it's less than 10 million. I don't mind taking a starter here. I think I probably should have took a starter around 8:30. I don't mind adding into the morning, and then just covering into the dips. You've got the higher low, you've got the VWAP reclaim. This should have been a profit. I just got a bit stubborn on VWAP, but it's perfect strategy. This was 250 fucking million. The volume pre-market is deceptively low. However, the opening candle on the opening minute is 4.6 million. which is a lesson to tell you not to short on 930 and 945. If I had a short at 945 on the fail of the double top, I would have been in at about 120, covering around 105. And then when it starts to try and break the higher day, yeah, you just got to be out. Again, that should have been a profit. ONTX was quite a good first red day. Ogen, not a bad first red day. Crap. Pretty good volume here, but it's a 500,000 low float, so you can't touch it. I took that long. And then here is missed 150 million, 3.5 million at the open, too heavy pre-market. So you've got 20 mil traded pre-market, low flow 4 mil, 3.6 mil opening candle. Should have left it till about 1040. If I had left it till 1040, I actually still would have took quite a lot on the downside, and then I would have just cut it in the afternoon when it ramped up for a squeeze. And that's it. So I'm giving a lot away. I'm giving all of my trading secrets away, and I'm giving them all for free. And I don't know many people who go in this much detail about the losses and holding nothing back. I mean, look, this is my strategy. This is how I trade. This is how it works. And I feel a bit naked giving you this, but I just think it's a good recap. It's a good lesson. And I've done everything else publicly, so I may as well do this. So peace and thank you for watching. If you watch till the end, say write Jethro Tull or write your favorite musician for fun. If you watch till the end, write your favorite musician, and everyone will be like, what the fuck's he doing? And otherwise, give it a thumbs up. Cheers.